Maya builds digital fortresses. As a high-end cybersecurity consultant, her daily job is locking down Fortune 500 networks against sophisticated attacks. But outside of her client contracts, her own financial architecture has a glaring vulnerability. Her retirement plan is entirely exposed. As a 1099 independent contractor, she doesn't have an HR department automatically matching a 401k, and there is no defined corporate safety net to catch her if she falls. Her income operates on a feast or famine cycle. One month brings a massive fee, the next brings almost nothing while hunting for gigs. Traditional retirement models demand rigid, fixed monthly contributions. Map those static demands against her erratic cash flow, and the math breaks. She needs a system that provides high growth potential without locking her into mandatory monthly payments. Relying on the default W-2 playbook doesn't work for independent contractors. They have to actively engineer a custom, adaptable financial patch. The first step in building this architecture is isolation. Maya sets up a dedicated business checking account. This acts as her primary security node. It captures all her consulting revenue before it can mix with her personal spending. Connected directly to that node is her main storage server, a solo 401k. This chart shows the stark difference in storage capacity. A traditional IRA caps out around $7,000 a year. A solo 401k raises that ceiling up to $69,000. Because Maya is self-employed, the IRS lets her act as both the employee making elective deferrals and the employer making profit-sharing contributions. A high contribution limit is an empty container. It doesn't protect her from market crashes or adapt to her fluctuating cash flow. For that, she needs to install a specialized internal software patch. That patch is a flexible premium indexed annuity, specifically Flex Secure Growth, running directly inside her solo 401k framework. This chart illustrates her account growth linking to a market indexed. In a strong economy, her accumulation line captures upward gains. But if the index drops, a 0% floor activates. Her value locks in place, protecting her contributions from market declines. The final feature of this annuity is what makes it work for a freelancer: flexible premiums. When Maya lands a massive 6-month contract, she can aggressively surge capital into the annuity, maximizing that high solo 401k ceiling. And when she's between gigs, the system scales down gracefully. She can halt her contributions entirely without facing any penalties. This combination of index-linked growth, hard downside floors, and flexible inputs creates a financial ecosystem that captures market upside without forcing her to contribute when cash flow is tight. The complete architecture now operates as a functional loop. Variable consulting income flows to business checking, routes to the solo 401k, and is shielded from market losses by the indexed annuity. Inside that secure environment, her accumulated wealth compounds tax-deferred year after year. She isn't dragged down by annual tax bills on the growth. Maya can now focus all her energy on her complex cybersecurity work. She knows her personal financial baseline is automated and secure. She built a retirement strategy that scales with her professional success while defending against market downturns. High-earning independent contractors face unique structural challenges. To secure their wealth, they have to actively architect their own financial systems.